Today we're going to take a look at the supporting indicators that come with SuperDots, the stochastic stack, and the price projection zones. We'll look at how they help you understand momentum and where price is likely to move next. While SuperDots gives you structure and trend, these tools help you read what's happening inside that trend. Let's start with the stochastic stack. This combines a fast stochastic, the blue line, and a slow stochastics, the yellow line. Together, they give you a clearer picture of momentum within a trend. The fast stochastic reacts quickly to price, while the slow stochastic moves more gradually, giving you a smoother view of overall momentum direction. When both are moving in the same direction, momentum is aligned. As you can see here, price is trending higher. The slow stochastic is gradually working its way up to the upper extreme zone, while the fast stochastic is flipping between the extreme zones. When the fast stochastic returns to the lower zone, price pulls back, offering a strong entry opportunity. So how do we know this is a pullback and not a reversal? Because the slow stochastic is still moving higher towards the upper extreme zone. That tells us momentum is still playing out, and this is likely just a pullback, not a reversal. So combining the two stochastics is especially useful for staying in trades and spotting pullback entries. A common mistake is exiting too early just because price pauses or pulls back. But if the slow stochastic continues to hold its direction or remains in the extreme zone, it's usually a sign the trend is still intact. Now, on the flip side, when you start to see the slow stochastic roll over and move out of an extreme zone, that's often an early signal that momentum has weakened. This can help you prepare for a deeper pullback and often a complete trend change. Now let's look at the price projection zones. These zones are designed to highlight areas where price is likely to move towards based on current structure and momentum. As you can see here, we have a blue zone printing above price and a yellow zone printing below. This corresponds to the stochastics pointing in different directions down here. In this case, we'd expect price to move up to the blue zone first before potentially continuing down to the yellow zone. And that's exactly what happens. Price moves into the first blue zone, then a new one prints. We tap that as well. The third one misses. And eventually, price rotates down into the yellow zone. This gives you a visual target, not as a fixed prediction, but as a probable area where price may reach. These zones are especially useful for managing trades. Instead of guessing where to take profit, you have a clear area to work with. And as price approaches a zone, you can assess momentum more closely. If momentum remains strong, price may push through the zone. But if momentum begins to fade, that zone can act as an exhaustion area. Where these tools really become powerful is when you combine them with the SuperDots indicator. You then have 4 key pieces of information: structure, momentum, trend, and a potential target. And that's what allows you to make more informed decision or without overcomplicating your chart. Instead of guessing where price might go, you're working with structure, momentum, and probability. That's why the stochastic stack and price projection zones are the perfect companions to SuperDots.